Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Tuesday, July 16th, 2024. It is 3:14 p.m. Eastern Time, so I'm starting the video, and here's what I wanted to cover in this one. I will do a brief update on both the equity markets, and that'll include the small caps. I want to include them in this one, along with the regional bank stocks. The two are sewn together at the hip. I'll show you that in a second. QQQ update, of course, NVDA. And then we're going to roll into Treasury bonds. I think the next trade is coming up on those. And I have told you I've been putting together a list, compiling a list of long trade ideas, individual stocks lately. I'm going to go over two, I think, are new ones. I shared Etsy with you earlier. I'm liking that one. And I'm liking all three of these. I'll show them to you in a second. And then somebody asked for an update on cryptos. I'll do that at the end. I don't have a strong opinion, strong conviction, so I'll just show you why and let you know that I continue to monitor those. So starting out here, QQQ. This is a daily chart. Most significant level to watch right now is this uptrend line off the April lows right there. And we are currently testing that trend line. This is a daily time frame right here, guys. So I have it a little bit different on the 60. I'm going to show you that in a second. But from the daily time frame, this is what I believe to be the best fit. Lots of reactions on there. This is how I draw the candles. You want to include the most number of reactions on either the body, which is the fat part, and or the shadows. That's the skinny part. And this is certainly a valid trend line. And then I have this variation here off the April lows, which we're still targeting once we get a break of that trend line. That this is the one I just showed you there on the daily chart. So on the 60, again, I did a video earlier. If you really zoom in and squint, we're right on it. If I wanted to, here, let me show you a cleaner board. If I wanted to, I could draw it this way as well. I could draw a trend line off that same low. That's the last day of May, I believe, right there, and come in and capture the bottom of that candle and then say we're on it. So this is what we need to watch now. This is what I call a BOD, or benefit of the doubt trend line. Because if I can draw it this way or I can draw it this way, plus I do it like this, there's been no impulsive selling. We cracked below, we're just hovering. So you can look at it two ways. You can say that we broke down, we back tested. That's certainly, you can't argue that. That's just a fact there, if it's drawn that way. And then you can also say this one. And so this is the one that probably needs to go, since we haven't seen any impulsive selling following that breakdown. So that's it. To summarize it, QQQ is at trendline support, especially on the more significant daily chart. No sell signal yet. What I'm seeing today is just broad-based participation everywhere. The only red I'm seeing right now, for the most part, is tech. So it seems like some rotation out of big tech into everything else, and I'm going to get to some of that everything else in a second. All right, so that's it. Those are levels of watch. So we're really no breakdown, or as I mentioned earlier today. When you wait for a daily close below a support level, it increases the odds better than taking a 60-minute breakdown like I covered earlier. Either way, that's how I see it. We're on that trend line now. Could go tomorrow, could go probably not in the last hour of trading, but it could. And then let's look at NVDA. NVDA isn't everything, but it's almost everything, at least to me, one of the big ones here. And so that one did take out a clear break and daily close below the trend line. However, on that 60-minute chart that I showed you earlier, we took out, when I zoom in here, this is like, just taking a microscope or a telescope or a pair of binoculars and zooming in, we drop down, same uptrend line comes off the mid-April lows. And that one clearly broke down. We also took out my 127, like I mentioned this morning. But so far, the selling, we hit that, as I covered in the video earlier today, that next support, 124.52, minor support, and it's been moving sideways. Again, with that being said, this one to me is clearly on a breakdown. That doesn't mean now that breakdown may fail. We may back test what I showed you earlier today. I have this downtrend line right here. Minor downtrend line at the highs. If they pop it and they regain 127, because 127, you may have argued with me yesterday whether that was an important level, but you can't today anymore because we broke it. And then look what's happened. All day we've been bouncing under there. So if it was a significant, I'd still call it a minor support level. It's what I referred to it as yesterday, but it's been validated with additional tags, which helps to make it a little more important. Plus, you have that intersecting downtrend line. So if they can pop it there, they might want to make a run to back test the level. We still have some resistance there. However, let me just be clear again. A breakdown is a breakdown unless it fails. Right now it broke down. It's still well below that level, especially on the 60-minute chart, but even the daily chart, I don't have to squint to see that breakdown. That is a sell signal. That is a sell signal that I believe is going to carry over to the broad market and other sectors as well. And it was first into big tech. We're already seeing, again, weakness in the big names today with about everything else being green. We have Microsoft down 1%, still well off the highs. NVDA, of course, I already covered. Alphabet down 1.4%. Oh, yeah, let me do this because I didn't say I was going to do it. Apple has that wedge here. This is a daily chart. I know I'm moving fast, but there's that negative divergence, divergent high, extreme overbought conditions. This yellow line down here, if you look down below, both the PPO, I'm going to pull my indicators up, just make some use of the space here, and I'm going to zoom way back here. Okay, so on the bottom here, this down here is the RSI. The default on any charting platform, you're going to give you 70 is overbought, 30 is oversold. I say those are just generic, those are guidelines. Every stock has its own overbought and oversold levels. On Apple, 30 usually does the trick. The typical oversold, you want to go step in and buy there, especially in a bull trend. You can see almost every time it hit that level, it either reversed or went slightly lower and then reversed. I know you can't see price. I squished it up here. However, selling or getting out of your longs or shorting 70 doesn't really work. So that's why you see I've had forever and a day a line up here around 77.20, give or take. That tends to be the level. That's about as overbought as Apple tends to get. When it gets there, then the trend usually reverses. So you can see that we are at that level, and typically what happens when you become extremely overbought, it's usually not that stops the rally. It's usually a subsequent, slightly lesser overbought reading, which then gives you the negative divergence like you had there, and now you have here. So that's Apple for you on the RSI, extremely overbought. And the PPO, also at very high nosebleed levels. I don't have a comparable line, but I'll put one for you right here and show you. We can go back for years here, and you can see that's about as high as a PPO tends to get. There was an extreme right there, and that was following COVID. This was a outlier, never before seen event in the stock market in history, nothing like it. The world came to, it's the first time in history in the modern era where the world stopped spinning, not literally, but, with government shutdowns across the world and stock market melting down. And then again, you can think of no other word than an all-out nuclear response from, Washington, both fiscal and monetary stimulus, the Fed, as well as other countries. And so you really, you saw, this extreme here on the downside and then that other extreme to the upside. So those are kind of outliers. Again, this is kind of the range down here. So that speaks to the current conditions of Apple right now. To say it's overbought would be an understatement. Based on those indicators. Again, it's not a subjective measure. It's a factual, quantifiable measurement right here I just showed you. And on the flip side, you do have a breakout. And we had that in gold recently. Remember, and I told you on gold, it was a powerful breakout above the recent highs, but it got too far ahead of itself, and we had divergence, and then and gold floundered around and has been for a while sideways. So Apple. Let me phrase this very succinctly. I think the risk reward on going long here is abysmal. It's horrible. Obviously, it's in a strong uptrend, so you can't make a super hard case to short it just because it's overbought. But again, your upside is probably very limited. The risk reward is probably, in my opinion, skewed to the downside. And we just need to crack. I have not the best, but somewhat well-defined uptrend line that gives you that bearish rising wedge I already covered with you. So when that breaks, it should be a quick swoon down to this next secondary trend line there. And that would be a drop of about 6-7% in Apple if it happens soon. All right, so what I wanted to do is just go over the rest of the lot here. I'm talking about the big tech stocks. Microsoft, as I mentioned, coming off that divergent high, still down today. NVDA, as I mentioned, down, breaking down as well. Alphabet also just broke down. I know this is a busy board, meaning I have a lot of lines everywhere. I'm just going to show you the important ones. Very well defined from this low back here in early March. Distinct reaction right here, numerous reactions here, and this one broke down, was not impulsively. And there's a great example with these market leaders. They're so indexed, so heavily intertwined due to inflows, outflows, and all the indexing from the funds out there, both mutual funds as well as ETFs, that when one breaks down, you need to see the majority. Quite often, you need to see the rest break down. So Alphabet broke down. Back test. This is the third day back testing. And I always say the thing about shorting a back test is what happens is it kind of sucks because sometimes you can continue to back test at higher and higher levels. So your short trade is going on the water. But then often it plays out. Or sometimes you back test, and then you regain the trend line. So what I like to see after back testing, whether it's 1 day or 6 days or 2 weeks, is an impulsive rejection. Pretty far we got that. That's pretty impulsive candle right there. So what I'm going to do is give you check marks. No check mark is a sell signal for Apple. Microsoft, I don't want to start forcing trend lines, but we had this one here, which was a breakdown to back test. We are coming off a divergent high, and this looks to be headed down for at least a back test of its breakout here. You can see my targets, the uptrend line in 431. So we'll put Apple on a sell. Microsoft on a sell signal. Definitely NVIDIA today, whether it holds or not. Alphabet, yes, broke down as I just showed you. 1, 2, 3 back test rejection. So there's a check mark there. Amazon right on the line right now. Again, this is a daily chart. You can see my primary trend line off the early 2023 lows, which is a target. And then the secondary trend line right here. Nice and clean. Starts back in late October. Clean, distinct reaction there. Multiple reactions here recently. And we just tested it. So this one just needs a little nudge. So another 2-3% downside in Amazon anytime this week is going to put another one of the market leading tech stocks on the sell signal. And I don't care if 499 stocks out of the S&P or 495 of the S&P 500 are ripping and bullish. These 5 go down, they're taking the market with it. Again, that's not opinion. It's mathematics. All right. It's simple stuff due to their weighting. So, and again, I've been very clear. The short I like is on the Qs, not on the S&P 500. I'm seeing too much, lately that, we're seeing broader participation. The breadth metrics I've spoke of are things that have lasted for many, many months now. The poor breadth and deterioration. Few days doesn't make a trend. But right now we're seeing that, and it's what I expect when you look. Again, I've gone through and I see a lot of individual stocks and sectors that are setting up for what may prove to be bear market rallies, probably in most of those. But again, they have much better charts, much better risk-reward profiles than do the big tech stocks. So we can see this, and we may see the continued thing. So we could see this continued profit taken in big tech. And then again, that's why I'm about to give you some other names, be more selective on individual stocks, no matter what index they're in or what sector they're in, as long as they have more constructive, i.e. bullish charts. All right, so Meta, I just wanted to continue on this because this is important. I haven't updated the big fangs in a week or so. There's the primary uptrend line. It's nice and clean, comes off the late October or early November lows there. If you zoom in, you can see this trend line also comes in here and captures a lot of recent reaction lows. And there it is. We broke down and we're well below it. So there's another one of the big techs on a sell signal. Tesla hit that big resistance level I talked about recently. Had a pullback, back tested the trend line. All in all, this is a breakout and a back test. So it's hard to knock it at this point. Like I said, it was a short down there, from resistance back to the trend line. But see this parabolic run, and I'm going to show you another one right now. Both the small caps and the regional banks, it looked very similar. Tesla took out the downtrend line, and then that 198.16 level months back when we were here. Remember Tesla? I pointed out Tesla and was it Apple is the two most bullish of the Mag 7 or big tech stocks. and Tesla, and I said once it took out 198.16 should rip, and it ripped. It certainly ripped, and that was all the way back here somewhere. Anyways, I'll have to pull that post later. All right, so now let's go to the smallies, IWM. Remember, I made a comment that, it's not time yet. I can't make a case. Overbought's not a reason to sell, but it is certainly. Again, it's just something we use in technical analysis. I'm going to pull up the things here. And you can see my overbought level for the small caps is about 76. Disregard that 70 level. That doesn't do the trick. They all have their, every security has, I put my own level on most of them. If I notice, some of them do respond or behave well at the 70 level. So you can see, I've done this before, and I know this is, again, let me squish this down. I'll give it a little more room. I've done this many, many times, highlighted these pushes up to that level, and now it marked the top. That was the all-time high in the small caps back in 2021. We're still well below that. We pushed up to that level there. That was one of the biggest drops in years, other than that one. All these were these circled areas you can see on here. I have here. That didn't give you much, but it was a double-digit drop right there off that level. And now here we are again. So what do you think the small caps are going to do? Another 10, 15%? No, they're going to correct. They're going to correct very soon. And I'll tell you when it's probably going to start. It's going to start soon. With the next trade for me, unless I miss a short entry and it pulls back, then maybe I'll get in long later. Well, who knows? But big negative divergence forming here, and 60-minute chart. I gave you earlier this uptrend line that will probably do the trick to trigger a pullback. And what you want to target if you're an active trader, you get bounces. They're going to buy the gaps. There's a gap. There's a gap right there. And but ultimately, this looks something like this, probably the next correction down to 211.13. But so look at, let me go back to our IWM, turn off all the lines. Just see this and just study that chart for a second. Take in the price action. And I've talked about this in the past, so I'm not the only one that knows this. KRE, regional banks, small cap, the Russell 2000 is chock full of regional banks. In fact, it probably is one of the heaviest sectors. You can look at the chart, and again, they mirror each other, especially this recent move. So this is, if not 100%, 90% of this rally in the small cap, the 2,000 stocks in the Russell 2000 is attributed to this small subsector in there, the regional banking sector. And the regional banks, as I pointed out recently, broke out. You had a downtrend line right here, bear market downtrend line. I had two variations. I have this one here, and then the BOD, which is slightly above. It captured that previous reaction high. So boom, okay, that's a breakout. It's got volume on it, everything else. Why did they break out? Well, technically, because they took out the trend line. That's very simple. Fundamentally, because it's very simple too. The odds are finally 80% plus that we're going to get a rate cut coming up this year in a couple months. And the small caps and the regional banks, it's a lifeline for them. Well, the Fed threw them a lifeline. They were backstopped. They had no downside, but they were dead money for a while because they got to unload all their underwater bond holdings, those that were marked for maturity to the Fed's program. But then there's this, assumption that that when the Fed cuts rates, that long-term rates are going to fall and the value of those bonds will go up, and maybe and there'll be a lot of refinancing. I can make all those fundamental cases, if the rates go down. But if we're in a recession, see, the problem is, yes, there is a ton of corporate debt coming due, regional, especially commercial lending. Remember that regional banks are the largest supplier of commercial loans. JP Morgan dwarfs all the regional banks probably added up together, all the big banks, JP Morgan, Citibank, Bank of America, but it's the regional banks. There's more of them, and they do the majority of local, commercial lending, and that's what's been underwater recently. So now there's this, where I'm going with this is you can make the fundamental case, okay, rates are going to go down. We know about the debt maturity wall. That means a ton of corporate debt, especially that was issued at near zero rates in recent years, with about 4 or 5 year maturities. When COVID hit, we had the zero rate policy. All those loans are coming due. They're coming due this year, as we head into the end of the year and next. And so I'm assuming here, I haven't been reading about this, but I just know how the street works and regional banks. I'm assuming this is pricing in. They're just going to have a field day refinancing the debt. However, if the economy starts to roll over or continues to show signs of deceleration, and that deceleration or slowdown increases, then you're going to see a couple things happen. And one of those is lending standards are going to have to tighten up. Credit spreads are going to widen. So right now, credit spreads have been artificially and unusually low for quite a while. That's the difference between safe money treasuries and then lower grade paper, especially junk bonds. So, the Fed cutting rates on the short end of the curve may be partially, fully, or even then some offset by a tick up in credit spreads. So when these companies do go to refinance over the next year or two, it may not be a field day for these regional banks. They may be more restrictive on their lending standards and higher on their rates. So it makes it more difficult for those companies to refi, and they go belly up. Some of them, quite a few of them possibly. Either way, here's where I wanted to go. I told you I'd tell you where small caps are going to stop right here. I have a zone. I really have an upper zone, but this is the big level. It's about 56.60. We're almost there now. KRE is at just hit a high today of 55.91. It's just off that high right now. No, I'm sorry, 56.12. 56.60 to me is big resistance. It's a level back here. It was key support, and when it broke, I mean, a blind man can't miss this as far as a key technical level. When that very well-defined support, it was a symmetrical triangle pattern. We were in a downtrend. They'd already peaked. They had this, not symmetrical, guys, descending triangle pattern. It broke. It was a powerful sell signal. Banks they were headed towards zero, but then, of course, the Fed backstopped them with the that BTFP, whatever it was called. And you have the downtrend line now has been taken out, but we're rallying right to that level. Anything is possible, but I would be quite surprised if we just sliced through there and kept going. The next resistance level I have is the top of that range. Let me give you the levels right now, just in case it does happen. Sometimes crazy things do happen. 65.25, and then I have another level here. It's really more of the top of the resistance zone, about 58.27. So I'm going to color that up for you. But the bottom of it is right there, 56.60. So I'm doing this for 2 I'm throwing this out as a short trade idea right now. I can't make a screaming case. This thing's gone literally vertical, but it's going to, when it corrects, there's going to be a lot of profit taking, and I expect the regionals to drop quick in short order. Probably have a good 8%. There's a gap right here. Again, just like IWM, these gaps are going to line up. Remember, these guys are pretty much one and the same right now. So a short on one is to a short on the other. You guys can go whatever you want. Liquidity is better in IWM, obviously, but KRE is going to have a little more bang for your buck on the downside. And so, I'm going to short some right after this video. I stopped the video. I'm going to put a short on KRE here in the regionals, and maybe even some RTY small cap futures, and then layer in pretty hard if we get up here to here. And then if it pops there, I'll stop adding, and I'll stop out anywhere if it keeps going up much past that level, and then I'll look to short again if we get up there to 65.24. But I will not be going long. So that's it. I think there's a good chance we'll pull all the way back and back test that trend line right here. And if so, just like Tesla did the other day, this had again almost an identical chart of Tesla a couple weeks ago, taking out that primary downtrend line it had off the highs, its all-time highs. That's about if we get there, minimum target's about a 6% drop. Max target would be a back test. That's about a 12%. Max near-term target. All right, so there's an idea for you. And again, if it happens, if KRE does that, IWM is going to do the same thing. I just zoomed in here, but IWM, and there's a nice uptrend line on IWM to target. So pullback target, plus that 208.50 I had in yellow was a big level. Intersects right there, 7. There's your drop, guys. My preferred pullback target's about a 7% drop in the small caps starting now. with, like I said, just a hair more potential upside, I think. So it's not worth it trying to squeeze out and hold out for that, even though, like I said, I can't make a scream. I can't, but there's zero sell signals right now. But again, you know me, there's always say there's two ways to objectively short a stock or an index. Either a rally into resistance, if you believe that resistance level is going to cap the rally and you're going to get a tradable pullback off it, which is what I see in this case, or you wait for a break of support. So we obviously don't have a break of support till we get down here. These are your big support levels. And if they go, you know, and I expect wholeheartedly expect them to come in and buy that initial tag of that level. So if I still short when we get there, I'll be most likely covering, go along, playing the bounce, and then maybe, and quite likely, based on these divergences and everything else, looking to then get short for a deeper, longer swing or trend short. Okay, now the good stuff for being long and diversifying. I told you, and I've been dripping out long trade ideas recently for you. WBD, Warner Brothers Discovery, big divergent low. I don't have everything marked up here on the chart, but you can see this was a divergent low right there, and it ripped. This was a divergent low, and it ripped up there. This is a divergent low with a nice clean downtrend line in which to trigger a buy signal. And 886 is the first, you know what I needed? I haven't updated these levels. Yeah, I'm going to leave it there. It's more of a range here. And so it's about a roughly a 14% target. I'm targeting this longer term downtrend line, which comes in with this, what I call resistance zone that runs from 888 up to 954. I have 3 resistance levels in close proximity. So that's it. So there's your target. You can set a stop. Oh, and now you can see I have, this is my primary trend line, the white one, which has been taken out today, but this yellow one's a BOD, benefit of the doubt. So this one, you might want to wait till tomorrow, see if it follows through and if the market somehow holds up. Like I said, NVDA has the potential to bring tech down, which then will spill over everything else. So I'm just sharing this idea. Take it if you want. And if you do, obviously, if the breakout fails, you might want to give a little bit more. Again, it's late in the day, so I don't breakouts that they're that close. You could follow through tomorrow. Earnings in 2 weeks, if this is correct. Sometimes these charting platform says August 1st. Keep that in mind. Etsy I gave you earlier today, and I gave you my thoughts on that. I said there's enough time. Again, if this is correct, August 7th, breaking out above the downtrend line, and you get 2 minor resistance levels here, and I give you these targets on Etsy. And then the other one is not my typical pattern, but it's just, I think, a company. I know it's selling. If that P ratio is right, it ain't cheap. At about an 80p ratio on trailing earnings. Again, if this charting platform is correct, sometimes it's not. You can check Yahoo Finance or anywhere else. But here's one that ONON on Holdings. They make on cloud. I've got a pair. They're super comfortable sneakers. They're priced. I'm seeing them everywhere now, and I think they're just going to be eating Nike's lunch. As the brand becomes more and more popular, especially the prices, they range from $100 to $200 usually a pair, which is more than most Nikes. I guess I haven't bought Nikes in forever, but I just think it's a growing brand. And look, bottom line is from the chart, it's only been trading since 2021 right here, put in a big divergent low. It's been in a clear uptrend, and so again, I'm working hard to find objective long entry. So I have an uptrend line in a price support zone. The support zone runs from about 31.78 up to 36.13, which comes in with the trend line. So on this one, we're not far above it now. If we get a correction in the market soon, we pull back to that anywhere to the support zone down to, but not below the bottom. Ideally, you don't want to see the trend line violated. Be a buying opportunity if we get there. We did put a little divergent high recently, but it already gave us a correction. And in an uptrend, you get these divergent highs, and they give you the pullbacks. And so targets up here, and we've only had that peak high after it went public, and that's about 55.77. If the market craps a bed, it's probably not going to get there. But again, I'm throwing out ideas to you. Especially if you're a long short hedge trader, take the best looking longs along with any index shorts that you have or individual shorts, and tends to balance out. Okay, let's bring it home with crypto only because somebody asked, and my reply was, I follow crypto on daily. I follow almost all the main stuff that I've covered on and off over the years. But crypto, I keep an eye on Bitcoin and Ethereum. I'm trying to find the charts for you. Um, and I just haven't, at least in recent weeks, haven't had any strong convictions. This is Bitcoin, the actual crypto, and you can see here, it's just been this, and Ethereum too. This is since February right here. It's been in this sideways range. I should have used a box tool, and so when I go down to the shorter term charts, it's just kind of sloppy-ish. There was a downtrend line there taken out. We had a little bit of divergence there on the RSI, none on the PPO. It's just not been my kind of chart, and I just want to let you know that I watch it. I don't have strong convictions today. Maybe next week, maybe 3 weeks from now. You feel free to bump me whenever you want, but again, it's in that range, and again, that goes back all the way here to February, end of February. And so I just can't make heads or tails of it. I don't try to force opinions on a chart. If I don't clearly see something as being bullish or bearish or having clear levels, support and resistance. Here's my Ethereum. It's marked up a little more, as you can see. Big support. I did have some convictions there, and I believe I would have mentioned it at the time. If not, positive divergence at that same low. Took out the trend line here. There was a bullish falling wedge breakout and it exploded up. But again, it also has been since February in this range, it's bigger range. And right now we're about smack in the middle of the range. And I don't see a whole lot here. You can see I have a couple trend lines there. It's at the previous reaction high. So you could certainly add a resistance level right here, right now, because that's a previous reaction high. But that's it. I don't want to spend any more time on it. I don't have as of today, strong convictions. And let me get this video out to you guys. So that's the thing. I like small caps as of now for a short with even a little more upside adding to it. Same thing with the regional banks. Get a little more bang for your buck. They got a little too hot ahead of themselves. And that's right, treasuries too. And that'll also play into my small cap short here. Treasuries, there's RTY for you. Futures traders. Let me just go to this chart for you real quick. This is what RTY looks like. And by the way, RTY is a small caps futures. That's what I'm going to be shorting here. And you do have big negative divergence on my beloved 60-minute chart right there. It's not confirmed because they're still going up. We need to turn back down soon and put in these lower peaks that we currently have in the RSI, but I think we will. So what I wanted to show you, Treasury bonds, and then I will wrap this up, and this plays into it too. ZB, that's your 10-year. Nope, I'm sorry, I mean the 30-year Treasury bond futures. There's resistance right overhead, about 120, 200 on the 30-year, I'm sorry. We've got negative divergence right now, and we have a nice uptrend line in which it triggers sell signal. This was a divergent high right here, followed by that drop. And this is a divergent high, so I see minimal upside, just like the small caps. And so when that happens, we go down. That means interest rates, when bonds drop, rates are going up. The bank stocks aren't going to like it. The small caps aren't going to like it. So it aligns. I just want to let you know my outlook for treasuries. This is ZN, the 10-year, even more important for the markets and for the banks. There's a bearish rising, beautiful little bearish rising wedge. There's your setup too for treasury bonds right there. Minimum target, secondary target. Just wanted to point out that the upside in bonds in the near term looks limited. They look like shorts. This is IEF, the 10-year bond. This is a divergent high right here, so I'm just going to duplicate that line. There's our divergent high. This was our last divergent high. That was a divergent high. That was a divergent high. And that was followed by that. That was a divergent low. You guys get the stuff. We've traded so many of these. And so this is the next and latest divergent high on the 60-minute chart. And then TLT. You get more bang for your buck. Also a divergent high here on the 60-minute chart. Duplicate that. Put it right here. And I'm going to move this line right now because that's where I think a minimum target down there at about 92.78. And so if that happens, smallies and the banks aren't going to like it. All right, I shall wrap it up here. This is Randy Finney with Right Side of the Chart. Have a great day.